Hello, all you lovely people. How are you doing? I'm Kate Hill, and I'm here to give you the best unbiased and honest commentary about our property markets, along with fantastic hints and tips. So stay tuned for all your latest property news. Now this week, APRA has announced changes to lending standards that will affect everyone trying to borrow money for a property purchase. Now, I've done a whole separate video on what's happened and what it means, so be sure to check this out right here. Okay, so in other property news, it may surprise no one that Australians have become even wealthier in the past year, with the ABS figures revealing that growth in property values has helped drive household wealth up by 5.8%. The latest figures on household wealth for the June quarter 2021 shows that household wealth has now hit a record $13 billion, with wealth per capita up to $522,000. Residential property contributed 4.5 percentage points to the quarterly growth in wealth, with superannuation adding 1.1 percentage points and shares 0.3 percentage points. With Australians unable to travel, savings were also high, with $341 billion now sitting in Australian banks, although household savings weakened a bit in June on the back of further spending and fewer lockdown days. Australian Bureau of Statistics Head of Finance and Wealth says that a growth in owner-occupied loan balances is the strongest it has been for 5 years, and that the value of loan to owner-occupiers hit new highs for the first 6 months of 2021. Renters are finding it even harder to secure new premises, with the number of properties available for rent at a near all-time low in August. The latest REA Group's PropTrack rental listings report shows that new rental listings dropped by 3.9% in August, which is the lowest level since December 2019, before the pandemic hit. The fall was most substantial in regional Australia, with listings down 4.7% in August, while the capital cities listings dropped 1.3%. That is a general figure, remember. The report found regional New South Wales, WA and Tasmania experienced the biggest drops in listings. REA Group Director of Economic Research says that the high number of owner-occupiers buying property is contributing to the lack of rental properties. There's also a lack of investors buying. New listings in August dropped by 30% in Canberra, 17% in Melbourne, 10% in Hobart, 3.7% in Brisbane, 2.2% in Perth and 1.1% in Adelaide, while listings increased 6.7% in Sydney and 5.4% in Adelaide. Vacancy rates are still high in inner city suburbs in Sydney and Melbourne, which have a large proportion of units typically occupied by that more transient sector of the populations, such as students and long-stay tourists, who have been kept out of those markets. Now, having said all of that, units are proving popular with buyers, with new data revealing record high demand in many suburbs. CoreLogic figures show demand for units in suburbs with desirable lifestyles are on the rise. I'm not surprised, there's some pretty good prices out there at the moment. More than half of the 994 unit markets analysed by CoreLogic are experiencing record high prices, with average growth of 16% or 108,000 since March last year. 2/3 of those growth markets are in capital cities, where the demand for units is, of course, typically much higher. CoreLogic says that while some apartment markets in the inner cities continue to struggle, they expect to see further value increases in other unit markets, particularly those in desirable lifestyle locations, of course. The strong growth in house prices in the past year appears to be slowing slightly, with the unit market now experiencing that uplift. But there are 434 unit markets which have values still below their pandemic, or below their pre-pandemic levels, I should say, with the top 10 biggest drops all occurring within Greater Melbourne. The number of properties listed for sale is finally starting to lift as Australia moves into the so-called spring selling season. Every capital city has recorded an increase in the number of new real estate listings in recent weeks. While the lift in listings is good news for buyers, CoreLogic's figures show that listings are still below 5-year averages in every capital city except Adelaide, Perth and Darwin. The largest lift in new listings is in Melbourne, where the rolling 4-week count since the first week of September increased by 48.5%. The increase follows, of course, the easing of restrictions on property inspections in that city. Nationally, during the same period, new listings are up 9.8%, although that is still 3.9% below the 5-year average for this time of year. Sydney's new listings remain 3.9% below the 5-year average for this time of year, while Hobart and Brisbane listings remain 9.6% and 3.8% below the 5-year averages. Now, as always, I am going to keep you posted on all things property from around Australia as our year progresses. You know I am giving you the best commentary and content here, so just give me a little subscribe, hit the like button. I do really, really appreciate it, and I will see you again very, very soon. Bye.